Bitcoin ETF is about 9 months old. The ETH ETF, 6 weeks, 7 weeks old, really young. And really with ETFs, as far as my education has been around them, they age well over time. People, financial institutions get more comfortable with them. They get integrated into the financial system in different ways. And we're still not even a year into this whole process. Can you kind of illustrate for us what the next few years of the crypto ETFs, Bitcoin Ether ETFs integration into the financial system looks like? Like what's left? There's juice left to squeeze. What does that look like?
Yeah, well, this is very early, as you note. Most ETFs don't really start to blossom until multiple years after they were launched. So the Bitcoin ETFs were quite an anomaly. And if you kind of put it into historical context, the fastest prior ETF to reach 20 billion in AUM was actually QQQ, which has been an extraordinary ETF, obviously. That did it in 661 days. And IBIT hit that in 144.
Wow.
Right. So it really has been unprecedented in a lot of ways. And that's not trying to pat myself or ourselves on the back. It's a function of the demand that exists for this and the convenience with which a number of investors across different archetypes view the ability to access this in an ETF. But as we talked about a bit ago, it's still early in the process with a lot of the wealth advisory channel and with institutional. And I think a lot of institutions are looking at just what I described, which is they want to see consistently that correlation being low or even negative. And then the question shifts from, is this too risky for me to own, to potentially, is it risky actually not to own any of this? Right. And so, if there were another event that happened that were disruptive in traditional markets where Bitcoin performed very well, I think you would see that be a pretty significant catalyst to adoption. But for a lot of our clients, it's just a continued education journey. It's a continued journey of getting approved for advisors on more platforms. We're going to continue to be along that ride.
What can you say about any interest or demand for ETFs beyond Bitcoin and Ethereum? I know these two assets represent something like 70% of the total crypto market cap. But might we see further crypto ETFs out of BlackRock in the future? Is that something that you guys are interested in? Do you guys know if there's demand there? What can you say about that?
Yeah, I think, obviously these things evolve over time, and so our approach to it will as well. I think today, what we do see is, from an investment perspective, overwhelmingly the interest is on Bitcoin, and then Ethereum is a clear number two, and then not a whole lot for kind of the longer tail of crypto assets. But there are obviously some interesting projects being built, in that longer tail. Some of them we're engaging with from a sort of operational and technology innovation perspective today. That may be, part of the journey that ultimately leads to their greater adoption, including potentially as ETFs. But I don't think we're particularly close, frankly, to seeing more ETFs beyond the Bitcoin and ETH that we have today.
I think the ETFs are certainly exciting, and it makes sense that this is a very big way that BlackRock is very involved in crypto. But I think we're all kind of excited to see what's over the horizon here, because the ETF is actually more of a TradFi product, and we like DeFi, we like smart contracts. And so I kind of want to get into the world of tokenization. Larry Fink in an interview, he alluded to this, that his eyes are beyond the ETFs and he's more interested in this concept called tokenization. And then not too long after that interview, the BlackRock Build Fund got launched, which now has over $500 million of AUM, of course, tokenized treasuries on Ethereum. Talk to us about the aspirations of the BlackRock digital asset team when it comes to tokenization.
Yeah, we're very excited about tokenization. A lot of the firm, as you noted, Larry as well, is excited about tokenization. This is something that has the potential to be massively transformative for financial infrastructure, right? Particularly when paired with some of the DeFi applications that you can build around tokenized assets. I think we have to remember that we are super early on this journey towards tokenization, right? And I think there's three big things that need to happen for us to have kind of that inflection point moment where this really starts to accelerate in terms of its adoption. And that's one, a breadth of institutional grade custodians who can support, both crypto and tokenized assets. Two would be big, credible trading marketplaces for tokenized assets, such that the liquidity value proposition that today is mostly theoretical around tokenization actually can manifest. And the third is regulatory clarity. And a big part of that is simply the recognition that if I tokenize a bond, that's a bond. If I tokenize a stock or an ETF, that's a stock or an ETF, et cetera. So we're building on this journey. It's still super early, but if it happens, if that vision is realized, we would have a vastly more efficient, accessible, low cost, flexible financial system potentially than what exists with traditional rails. And I think that's what gets everybody excited.
Do you guys, Robbie, have sort of a like framework or a roadmap for like what gets tokenized first? And of course, like in crypto, we call these real world assets, just to distinct from our like imaginary, like, internet money type of things that are crypto bearer instruments like a Bitcoin or Ether, the asset. But so let's talk about tokenization from the perspective of real world assets. Like, what asset classes happen first? I would say the original, tokenized asset is probably dollars, right? The stable coin is an example of tokenization. And David was mentioning the Biddle Fund. There are others that are trying to tokenize treasury. So maybe bonds come next. But how does BlackRock think about this in terms of asset classes? Are there some asset classes that are more conducive to this? What are their criteria? How do you guys think it's going to happen?
Yeah, well, obviously, a lot of the focus today after tokenizing cash, i.e. stable coins, has been, tokenizing sort of stable value yield instruments of various forms. And there's been coalescence around that use case. And there's lots of good reasons for that. Once you move beyond that into what comes next, I think there's not nearly as much consensus today around kind of the second, third, fourth, fifth most addressable, biggest value add asset classes. But certainly when we think about tokenization and what it could mean for our clients, the two headlines that we're focused on are access and cost, right? So what are some asset classes that are hard to access today for a lot of investors? And what are some asset classes that are really inefficient and costly to operate today that tokenization can make more efficient?
That's interesting. Access and cost are two interesting dimensions here. And I want to ask the question because, in the same way 5 years ago, there were a lot of people in traditional finance that were skeptics on Bitcoin and Ether as an asset. There are also some skeptics that are bearish on tokenization in TradFi. Of course, like no one that listens to Bankless, because we've been talking about this for years, but outside of Bankless, they would say something like, well, Robbie, we already have tokenization. You have tokenized products at BlackRock. They're called ETFs. That is the ERC20 of finance, an ETF. And we already have representations of bonds and stocks and securities markets. What is your pitch for the benefit of tokenization? You mentioned kind of like DeFi earlier, and maybe the ability to kind of like program smart contracts that have if-then statements for like what you can do with certain tokens. But then you mentioned access and cost. So what's kind of the elevator pitch for someone who's a non-believer for tokenization and who says we already have a traditional finance system, it works great. Have you seen securities? Like the market's going well. What do you say to them?
Yeah, well, first, actually, I'd say that viewpoint within traditional finance is actually not that prevalent. If you think back to kind of the first mainstream explosion of crypto and blockchain onto the consciousness of a lot of people, that was 2017, right? And in 2017, you heard a lot of blockchain, not Bitcoin, right? Now, there's some sort of challenges with that for a number of reasons, but putting those aside, that trade, so to speak, has been wrong, right, in this intervening period. Bitcoin and crypto, despite the boom bust cycles, has continued to ascend, and a lot of the kind of early blockchain applications and these networks and consortiums that were built, oftentimes private blockchain applications, have not flourished. That sentiment, though, still exists today, and it often takes the form of tokenization, not crypto. And I think that is flawed as well. And in fact, a critical unlock to tokenization is going to be likely the adoption of crypto. Because when you think about it, what's riskier for large TradFi institutions? To have allocations in, 1%, 2%, 3% to this new asset class, which is, risky and somewhat unproven, high upside, high potential downside? Or is it riskier to migrate potentially tens of trillions of existing financial assets onto this new technology paradigm? Well, when you think about it that way, the latter is obviously way riskier. So one of the ways that as an industry we're likely to de-risk that is to build solutions and comfort and adoption around crypto that gets firms used to using blockchain rails. And ultimately, that's going to support the adoption of tokenization. Now, why do we think tokenization is valuable? The properties that you can build into a system that is tokenized versus our legacy system are immense, right? When you think about liquidity, real-time, instantaneous, riskless settlement, 24/7 trading, the fact that these assets become digitally native, transparent, interoperable, that we can remove a lot of the layers of intermediaries that have had to exist in the current system, right? All these things create massive opportunities for efficiency, for financial inclusion, for access to a wider array of investments in a more efficient way. So that's what gets us excited.
To continue leveling up your crypto game, then you need to get on the Bankless newsletter. It's the world's most popular crypto email and is completely free. Just click below to sign up.